Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
there are winners and losers in a weak peso environment. A weaker peso is good news for dollar earners like OFWs and BPO workers because that means they get more bang for their buck. If you ask Budget Secretary Ben Jokno, the peso's movement is no cause of concern just yet.
Okay, so if you belong to the Prada Ferragamo crowd and you love to travel abroad, sorry ka na lang.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Hi everyone, welcome to the 9th episode of Short Stops. Today I'm with Charles William Ang.
Hello guys.
He is the Deputy Head of Research and he joined us on the previous episode. The market has been in correction mode for the past 2 months and it's been a global phenomenon where we've seen a huge drop all over the world. And in fact, correlations today are at the highest we've ever seen. So, Charles, what keeps you up at night?
Okay, so aside from those issues that you mentioned, the global issues, no, because the volatilities recently is not only in the Philippines. I guess the biggest issue is still in terms of valuations of the companies that we have. Recently, we just downgraded our index target to 8,700, so which is more or less close to what we're trading at today. But aside from that, also, another issue would be in terms of the inflation that we're seeing right now. A few days ago, the government announced the February inflation to be at 4.5%, which is higher than the expectations of the market, and also higher than the benchmark or the target range of the BSP from 2 to 4%. No, this is the historical target. So I think this is really what the market is concerned right now.
Is this something that's blown out of proportion or is it something that's coming, especially because we're going through a tax reform package and we're going through massive spending also to the entire country? Is this type of inflation normal?
Yeah, I think the right word is it's in a way expected because as you mentioned, the tax reform package, of course, it imposed excise taxes and then it cut also the personal income taxes of certain segments. So people were already expecting inflation to go up, but the actual magnitude is not really... I think it came out as a surprise. No? So that's where the concern is coming from.
If you look at the central bank and how they talk about these type of concerns, it seems like it's very normal for them and they kind of expect it also from what you're saying.
Yeah.
Is this something that you see, is it temporary within next year, this year and next year?
Yeah, I think it's more temporary than anything else because if you look at the tax reform package that was passed late last year, most of the biggest impact would really come in the first year of implementation, which is this year. So I think next year, 2019, it's very likely that inflation would fall back below 4%. So I think that's the reason why concerns of the market right now when it comes to inflation is a bit overdone.
Got it.
But yes, of course, it's still a concern because, you know, the result could potentially impact earnings results of listed companies, right? At least in the short term.
I mean, one of the other concerns that we've seen from the fund managers, especially from the Philippine perspective, is the devaluation of the peso.
Okay, so about the peso devaluation, I guess the first thing that I'd like to say is that if you look at it from a big picture, it's perfectly normal, especially now in a time wherein the Philippines is trying to accelerate investment spending. So that usually entails importing a lot of goods. And when you import a lot of goods, usually it would result in a bigger trade deficit. And in that situation, it's very, very normal for the currency of a country to depreciate. No? But having said that, if you look at on a shorter term horizon, I think the issue really is the excess volatility in the short term rather than the gradual depreciation over the long term. No? And this is in line with what the BSP has been consistently saying, that they're okay with letting the currency float, but it just wants to manage the volatility in the short term.
And to you, is it managed
To some degree, yes. Of course, you can still argue that we still saw some volatilities recently. So year to date, peso depreciated from 49 levels to 52 something now. No, so you could argue that it's a bit steep. But I think in general, the BSP has been trying to step in to control this volatility. No,
I mean, that's why there's also pressures for the BSP to raise rates also. I mean, we're having one more in March.
Yes.
Hopefully, we'll see some impact. And going forward, don't you see this as a catalyst for the market already pricing it in?
Yeah, that's a very good point, no? Because one of the issues also that magnify the volatility in the currency right now is what's happening in terms of the policies here and in the US. No? So I'm sure everyone already knows that in the US, the 10-year bond rates have gone up significantly over the last few months. And also, they had their own rate hike and further expectations of additional rate hikes in the future. No? So when you have these increase in interest rates in the US, of course, all else equal, the funds will move out of the Philippines and go to US, no, because of the higher yields. So markets now here in the Philippines are kind of expecting the Philippines to follow the US rates, no? Meaning the 10-year bond rates have gone up significantly also from 5 to 6%, 6+% recently. Also, we're also expecting the BSP to do its own policy hikes, but it hasn't happened yet for whatever reason. So I think when that day comes, no, it would be more in line with what the market is expecting, and therefore markets could behave more rationally going forward.
So most of the concerns that we talked about, coming from your standpoint, it's mostly temporary and short term. But if you look at the long-term economics of the country, it's still fundamentally intact.
Yes, exactly. No, so my main belief is that most of these issues right now are very temporary in nature. There's really nothing wrong with a depreciating currency. In fact, if you look at our currency versus the regional markets, we're still very strong over the last several years. No? So the depreciation is still smaller than the other currencies. So it's very normal. A lot of economists would argue that if you depreciate your currency, it would be even better for your remittances, for your BPOs, for your tourism. So it's very healthy. It's very normal. This disparity could be an opportunity for us if eventually this causes further market collapse, for example. Then it could be an opportunity for us to participate.
We've seen so much foreign selling in the last 2 months. In fact, it's still nonstop even as of yesterday. You think when they finish selling and with the lack of buying that's happening, are you a buyer in this type of environment, or are you worried?
Of course, I'm a buyer. No, long term, we're still very positive with the Philippine market.
So a big drop.
Yeah. So
it's an opportunity for you to be buying.
Yes, of course. Yeah. I think we're all waiting for that. I think our concern here is that it might not drop.
That's true.
I think that's more the concern rather than it dropping. No, when it drops, I think it's really no-brainer for us to be buying.
Since you cover the banking sector for COL, Charles, why don't you share to us your views and thoughts?
We're actually bullish when it comes to the banking sector. One thing that we talked about a while ago was rising interest rates, and in this particular environment, as long as the increase is gradual, I think banks would benefit the most. No? So if you look at the news, the loan growth has been very strong recently, 20% a year, and we don't really see this going down significantly. And so if you combine that with interest rates gradually increasing, that would lead to higher margins for the banks. No, we really think that banks could potentially benefit, especially this year or next year.
And we've seen a lot of banks beef up their balance sheets already with the stock rights offering.
Yes.
So what's your top pick for the sector?
The thing is, as you've mentioned, as we've talked about already for several times, the biggest issue really right now is about valuation. So if I consider the valuation, the thing is, a lot of these banks are trading close to or even above our target price. But maybe one bank that is still cheap as of the moment is Metro Bank. So if you're gonna force me to choose right now based on the current levels, I'm gonna say it's Metro Bank. No, I expect it to grow in the same way as I expect the other big banks to grow. But the key difference is that it's trading at a lower multiple, way cheaper compared to BDO and BPI.
And now for our last question. One of the things that's happening this Friday is the FTSE rebalancing. And we have FTSE rebalancing, we have MSCI rebalancing, we have the PSEI rebalancing. And what is rebalancing all about?
Okay, very good question. Basically, to start off, let's just explain what are these, like FTSE, MSCI, PSEI. Basically, these are indices. So FTSE index, it has its own index for the Philippines, MSCI also, PSEI obviously, right? So these are indices which aim to track the broad performance of the Philippine markets. So the biggest Philippine companies, they try to track their performance, right? So what happens is that every once in a while, these indices will change. It will change its compositions, right? And so what happens here is that the funds who follow these indices would then have to also follow the changes of these indices, right? And
so if they take something out, they have to sell it.
Yes, exactly. So for example, this Friday, right? I believe JGS and Lopez will be removed from the FTSE index, right? The JGS for the big cap, Lopez for the small cap. Now, so what will happen here is that effective Friday of this week, funds who follow the FTSE index would have to sell their own JGS and Lopez to maintain their tracking of the index, right? So usually you'll see sell-offs or selling pressures in these issues if they are removed, and vice versa. If it's added, then you see buying pressures, which are, we believe, temporary in nature. We really view these rebalancings as additional opportunities for us to improve our returns. No? So for example, if you see a huge sell-off this Friday, maybe 5%, 10%, I don't know how big. If you see those kind of sell-offs, then maybe it's an opportunity for us to buy it and then just sell it a few days after.
Got it. And it's not a fundamental problem.
Yeah, but by the way, so the indices, the way they rebalance their stocks, it's not really fundamentally driven. So it's just based on the market cap and the volume and the free float level. So it's not really related to the earnings of the companies or whatnot. No? So it doesn't mean that a company is removed or added. It doesn't really mean anything fundamentally.
Fantastic. Thanks, Charles, for being here on the show.
Sure, no problem.
All right, guys. So there you have it. Don't be worried too much about the short term. The long-term fundamentals is still intact. You have something to watch out for this Friday in case a huge arbitrage comes in and there's money to be made. Other than that, I'll see you guys next week. Have a great day.